guys, welcome to my channel. This is Jessie. I know that there are two types of things that we cannot escape from. One is death, another is tax. However, it is so lucky for our individual who live in Hong Kong. We are only subject to three types of taxes: the salary tax, property tax, and profit tax. And some of you would wonder that should I oblige to pay the tax on the investment income? My answer is luckily no, because in Hong Kong, usually we are exempt from paying any tax on the investment income. This means that if you had the capital gain from exchange the stocks or properties, and definitely you are exempt from paying tax at all. Or if you gain the dividends from holding the shares of a company, and definitely you are exempt from paying any tax on dividend income. Also, if you gain the interest income from the bank, you definitely don't need to pay any tax at all. Thus, I think that is the reason that Hong Kong has been well known as the tax-free paradise. Actually, I know that many of us know that in Hong Kong, the tax structure is really straightforward. And one of the most important components that we're gonna be subject to is the salary tax. And I know that many of us would wonder how much exactly we are subject to salary tax according to different income level, and what is the general tax rate in Hong Kong. So in today's topic, I'm gonna focus on the salary tax and give you a brief introduction about the salary test. And it's so lucky that the Hong Kong Tax Authority, IRD, the Inland Revenue Department, has created such a handy salary tax calculator on the website. We only need to fill in such numbers and information. We're gonna be able to get to know how much we are subject to the salary tax in the year of assessment. So my video consists of two parts, and in the first part, I'm gonna give a brief introduction about how to use the salary tax calculator. However, if you are not that interested in how to use the tax salary calculator or something like that, you think that is boring, probably you can directly jump into my second part. Because in my second part, I'm gonna talk about the actual amount of salary tax that we are subject to according to different income level in Hong Kong. For example, you just graduated from university, or you have worked for like 5 or 10 years, or you have worked for like 20 years or so. Definitely your income will increase gradually, and how much exactly you are subject to tax in different level of income in the different phase of our life. By the way, the taxable period starts from the April 1st of this year all the way to the last day of the March of the following year. Okay, here we go. Well, let me open the Google and enter the salary tax calculator, and here it comes the website of an IRD. Let's just click the year of assessment 2022/2023. Here we go, it comes salary tax computator, and initially we can select our marital status. We can select as single, separate, divorce, reload, or we can select that we are married. Well, for those married couple, they can fill in the tax return separately or jointly. It is selective, and the first and most important thing we have to fill in is definitely income for the year of assessment. Definitely income includes your basic salary, allowance, commission, bonus, gratuities, and other fringe benefits as well. And there are two rules that we have to pay much attention to. Well, the first rule is that any benefit capable of converting into the money by the recipient is definitely taxable. The second rule is that any amount paid by your employer in discharge of an employer's liability is exempt from paying tax by you. Well, for example, your company give you a credit card of the companies to pay your utility fees such as electricity every month, and for example during this month you pay like 1,000 Hong Kong dollars, which is in liability of your company because it is the company's credit card, it's not your credit card. Thus you are exempt from paying tax at all. However, if you use your own credit card to pay your utility fees like electricity, like gas and water, something like that, and your company reimburse the 1,000 Hong Kong dollars to you by the end of this month, definitely for this part it is allowance and you are subject to tax. Well, there is one type of income that we have to pay much attention to. That is your accommodation benefit, which is also a part of your income that you have to claim in your tax return as well. So what is the accommodation benefits? Well, generally speaking, that is like your company just rent a department for you and you are free from paying any rental expenses. Or you are renting a department on your own and your company reimburses the rental expenses back to you. And in this situation, you have to claim the accommodation benefits as a part of your income during the year of assessment. So how do you calculate the accommodation benefit? Well, it is worth mentioning that accommodation benefit is not the actual amount of money that your company paid for your rented department. Usually, the accommodation benefits equals to a percentage times your net income after deducting the expenses and outgoings related to your work. Well, usually this percentage is determined by the types of accommodation. It ranges from 4% to 10%. So you rent one room in a hotel, in hostel or boarding place, and it is like 4%. You have 2 rooms in a hotel or boarding houses is definitely 8%. If you have a residential unit or you have rented service department, that is like apartment equipped with all kinds of furnitures, percentage like 10%. Well, usually in terms of net income after deducting outgoings and expenses, where is those outgoings expenses? The outgoings expenses are directly, necessarily related to your work. Without those expenses, you cannot do your work. And that is the only expenses and outgoings that you can deduct from the net income so as to calculate the accommodation benefit. Okay, well, after we fill in the income, well, next part, we're gonna talk about 2 types of deduction and the personal allowance. Both the deduction and allowance are used to deduct from the income for the year of assessment so as to get the net chargeable income, which is the basics for us to calculate the final tax amount we're gonna be able to subject it to. Usually, there are 2 types of deduction. One is called allowable deduction. The next one is called the concessionary deduction. What is the allowable deduction? It is directly necessarily related to your employment, such as some machinery or equipment essentially used by taxpayer in the production of assessable income. The another example is a uniform. Well, especially those who work in the service industry, and you have to wear the uniforms to get your work done and earn your salary. And in this way, if you paid for your uniform, the expenses for paying the uniform are allowed to be deducted from your income of assessable of a year. However, if there are some people that are saying that, oh, I buy a laptop to do my work at home. However, if you have already equipped with a laptop from your company, this means that the laptop you bought to do your work at home is not necessary for you to get your work done. You already get a PC in your company. Thus, the expenses you paid for buying your own laptop cannot be deductible. Or the next thing is called a self-education expense. It is also included in allowable deduction as well. The self-education expense includes the tuition fees and the examination fees paid by taxpayer for prescribed courses of education institution. Well, what is the eligible requirement for this deduction? Usually, it has to be a qualified education provider, and normally it is like a university college in Hong Kong. And definitely it has to be in Hong Kong, but it is not necessarily have to be related to your current profession. So this means that it can be either a current or planned profession. So right now, if you are a chef but you want to just attend some accounting courses, and in the future you wanted to become auditor, definitely for those tuition fees that you paid for attending those accounting courses are definitely deductible, and the maximum allowable deduction is 100,000 Hong Kong dollars. That is the allowable deduction. Well, after talking about allowable deduction, we're gonna talk about the concessionary deduction. There are more components in the concessionary deduction. The first one is approved charitable donation. Well, and there are some requirements for the eligibility of this deduction. Well, firstly, the charitable organization has to be the qualified charitable donation under the section of 88 of IRO, Inland Revenue Ordinance. And here is a PDF file, and you can click it and check whether the donations are made to our approved charity. or not. And another requirement is that donation happens to above 100 Hong Kong dollars, and the donation should be in form of money donation. They do not accept any other forms of donation, such as you donate products, properties to them. It is not included in the concessionary deduction. And also the aggregate amount should not above 35% of your income minus the outgoings and expenses. Well, the next types of concessionary deduction is called mandatory contributions to a recognized retirement scheme. Normally, it is MPF, or usually in Hong Kong. Both employer and employee have to pay 5% of a salary as a mandatory contributions to the MPF as a retirement scheme required by the government. It is definitely mandatory and is definitely exempt from paying tax. Well, every month the ceiling amount of mandatory contribution to MPF is 1,500 Hong Kong dollars. So in a year, the ceiling amount of compulsory contribution to MPF is 18,000 Hong Kong dollars. Some people would say that I have two jobs. One is a full-time job, one is a part-time job. Both employers would pay the MPF to me, and there is a possibility that your mandatory contribution of MPF would be above 18,000 Hong Kong dollars per year. However, the maximum deductible amount is only 18,000 Hong Kong dollars per year. And normally in Hong Kong, only the mandatory contribution MPF is tax deductible, and usually the voluntary contribution MPF and other type of retirement scheme are not allowed to be exempted from the tax. However, the Hong Kong government offered the taxpayers such a great benefit. That is, every year we're gonna be able to deduct a certain amount of voluntary contribution to the retirement scheme. Here we go, it includes two types. The first is the tax deductible MPF voluntary contribution. The second is qualifying annuity premiums. Usually, the qualifying deferred annuity is a qualified insurance policy on the list of QDAP eligible for tax deduction. And the requirement is that the policy holder should be taxpayer or spouse, and the qualifying annuity premium should be paid by taxpayer or spouse, and an annuitant should also be a taxpayer or taxpayer spouse. And definitely the annuitant should hold a Hong Kong ID, and this is the eligibility requirement for deduction. And the tax deductible MPF voluntary contribution is the voluntary contribution to MPF, and we combine the voluntary MPF contribution and the qualified deferred annuity policy premium together, because in total they have a ceiling amount that is 60,000 Hong Kong dollars during the year of assessment. So if this means that if the deductions are allowable for both the voluntary contribution to MPF and qualified annuity premium, the deduction are to be allowed firstly for the voluntary contribution for MPF, and secondly for the deduction of the qualifying annuity premium. And let's stress it again, the combined ceiling amount should be like 60,000 Hong Kong dollars per year. And the next part is called the qualifying health insurance premium. The tax deduction for the qualifying premium paid under the voluntary health insurance scheme policy, VHRS. Well, usually the insured person should be your relatives. It should be your spouse, your only aged kids, your only aged siblings, or your parents or grandparents, which should be above 55 years old. The specific maximum deduction during the year of assessment per insured person should be no more than 8,000 Hong Kong dollars. Definitely there is no cap on the number of insured relatives claimed by the taxpayer, and the only requirement for the insured relative have to hold a Hong Kong ID, and there are specific age requirements. Definitely, as mentioned earlier, that for your parents and grandparents should be about 55 years old, and for your kids it should be underage. That means that they have to be below 18 years old, or if they are full-time university students, and and they can be above 18 years old but below the 25 years old. And the next component of a concessionary deduction, if we're going to talk about, is something related to our accommodation. This includes the domestic rental expense and also the home loan interest. This just represents the two status of your accommodation. One is that you rent an apartment and you had paid for the rental expenses, and the second is that you buy a property, but you have to borrow money from the bank and you get a mortgage from the bank and you have to pay the mortgage interest to the bank. And for those two types of expenses, rental expense and a mortgage interest expense, and a portion of them are definitely deductible from your assessment income as well. Usually for the domestic rental expenses, your rental expense should be paid on a qualified tenancy of a domestic premises, and it should be taxpayers' principal place of residence. Also, the tenancy agreement should be stamped under the stamp duty ordinance as well. Well, I know that nowadays this is so popular for people to live in those service departments. That is like a kind of accommodation that is different from those domestic residential buildings, and normally it is run by a hotel group, and it is not necessary for you to just get the stamped tenancy agreement under the stamp duty ordinance, and you only have to sign something like a license agreement or something between you and the hotel group, and you're gonna be able to live in this apartment. So for those type of service departments, if they are not get stamped, they are not eligible to be deducted from the assessable income, and the maximum deductible amount is like 100,000 Hong Kong dollars during the year of assessment for domestic rental expenses. In terms of a home loan interest, there are several requirements for the eligibility of this deduction. Well, firstly, the taxpayer should be the owner of the dwelling, and also the dwelling should be situated in Hong Kong, definitely, and it is wholly or partially as your principal place of residence for a taxpayer or a taxpayer spouse during the year of assessment. And also the loan should be secured by a mortgage or any other tax property. It's not necessarily have to be secured by this property that you borrow the money from the bank. You can use another property to secure this loan, or definitely. And also, we have to make sure that the home loan should specifically used for the mortgage. We have to use this home loan to buy this property. If we use the home loan to pay for renovation, definitely, and it is not allowed to be exempted from the assessable income, definitely. Also, the lender should be like an organization such as a bank or some government organizations, institutions. It should not be individuals such as your parents, your brothers, your sisters. And if you borrow money from your relatives and they ask you to pay something like interest expenses, and for those part of interest expense, they are not to be deducted from the assessable income, definitely. And the ceiling amount is the same as the ceiling amount of the domestic rental expense. It is 100,000 Hong Kong dollars during the year of assessment. But it is worth mentioning that the number of years of a deduction for the home loan interest have been extended to 20 years, with the current ceiling of 100,000 Hong Kong dollars per year. This means that for an individual taxpayer, his or her whole life, they are only entitled to 20 years of deduction for the home loan interest. If you have already used up this 20 years quota, you are not allowed to use if you buy a new apartment or something like that. In this way, if you get married, you have to arrange the home loan interest properly between you and the spouse. For example, if you and your spouse just share this home loan interest together for 20 years for the property that you are living right now, probably maybe after 20 years later, if you want to buy a new apartment and both you and your wife are not allowed to use the home loan interest as a concessionary deduction anymore, even though during the previous 20 years both you and your wife only deduct like 500,000 Hong Kong dollars per person. So I think that the best best suggestion is definitely during the first 20 years, you or your spouse use up the 100,000 Hong Kong dollars home loan interest for like 20 years, and then probably you will sell this house and you will sell this apartment, and then you will buy a new apartment continually. Your spouse can continue using his or her own home loan interest for another 20 years, and that is the most cost-effective way for using the home loan interest concessionary deduction. The last component of concessionary deduction is called the elderly residence care expenses. There are also some requirements for the eligibility of this deduction as well. So normally they should be your parents or grandparents, and they have to be above 60 years old, and also they have to receive residential care from a care center, and the expenses should be paid by you or your spouse on behalf to the residential care center. And also only one person, you and your spouse, can be granted deduction for your parents or grandparents during the year of assessment. And by the way, it is worth mentioning that when this deduction for the elderly residential care expenses has been allowed for parents or grandparents, this means that the taxpayer or spouse are not allowed to use the dependent parents or grandparents allowance. You can only choose between the elderly residential, the care expense, or the dependent grandparent or parent allowance. Also, this deduction should be based on the actual expenses incurred or paid by taxpayer or spouse, and the maximum deduction should be no more than 100,000 Hong Kong dollars during the year of assessment. Alright, we just wrap up the concessionary deduction, and the next part we're gonna talk about our personal allowance as well. The allowance includes our personal allowance and dependent allowance. Dependent allowance also includes the children allowance, the parents or grandparents allowance, and the brother or sister allowance as well. So normally for our personal allowance for per person, the personal allowance is like 132,000 Hong Kong dollars during the year of assessment. If you get married and you just fill in the tax return jointly, the personal allowance should be like 264,000 Hong Kong dollars during the year of assessment. And this is the basic allowance. For the dependent children allowance, there are some eligibility requirements for this allowance. Normally the kids should be unmarried, and it should be like below 18 years old on the age, or if they are a full-time student, and they can be above 18 years old but below 25 years old. It is worth mentioning that a children allowance in respect of all the children shall be granted to only one spouse. So you and your spouse have to decide who should be the one that accepts the children dependent allowance. Well, in brief, all the children's allowance should be claimed by you or your spouse. And for one kid, if the kid is born in this year, then children dependent allowance is like 240,000 Hong Kong dollars per year. If the kid is not born in this year, and usually the children dependent allowance should be like 120,000 Hong Kong dollars per year per kid. So the maximum kids that could be allowed to be deducted is only 9 kids. I think this similar eligibility requirement also applied to dependent brothers or sisters as well. The brothers or sisters should be unmarried, below the 18 years old, or the full-time students above 18 years old but below 25 years old. And the dependent brother or sister allowance per year per person is like 37,500 Hong Kong dollars per year per person. Well, the last allowance is dependent parent or grandparent allowance. This is a little bit complicated. Firstly, we have to decide their age, and there are 2 levels: the parents or grandparents that is above 60 years old, or the grandparents or parents that is above 55 years old but below the 60 years old. Well, if the parents or grandparents live with the taxpayer and the spouse for a continuous period of not less than 6 months, and the taxpayer are allowed to get 50,000 Hong Kong dollars per dependent during the year of assessment. Further, Furthermore, if the parents or grandparents reside with taxpayer spouse throughout the whole year continuously, and the taxpayer allowed us to get 100,000 Hong Kong dollars allowance per dependent during the year of assessment. However, if your dependent is about 55 years old but below 60 years old, this means that if they resign to visit the taxpayer or spouse during a continuous period of not less than 6 months, the taxpayer are allowed to get 25,000 Hong Kong dollars allowance per dependent during the year of assessment. Furthermore, if the parents or grandparents reside with taxpayer spouse for throughout the whole year, the taxpayer allowed to get the 50,000 Hong Kong dollars per dependent during the year of assessment. But for taxpayer, they can only choose between the elderly residential care expenses or the parents, grandparents, dependent allowance. They have to well think about which one to choose. Definitely. Here, after talking about is the personal allowance, and after deducting the personal allowance, we can get all the way to the net chargeable income. And we use the net chargeable income to times the tax rate, and we're gonna be able to calculate how much we are subjected to the salary tax. Normally, there are two types of tax rates: the progressive rate or the standard rate. Well, the standard rate is like 15%, and for the progressive rate, for the initial 200,000 Hong Kong dollars, there is a progressive rate ranging from only 2% to like 14%, and above is the 200,000 Hong Kong dollars salary. For the remainder, it is subject to 70% tax rate. And if you choose the progressive rate, definitely you are allowed to deduct the personal allowance. However, if you use the standard rate, and they are not allowed to deduct the personal allowance, well, for those who they are told to make a decision about whether they choose the parent, grandparent, dependent allowance or the elderly residential care expenses, if they further consider about choosing between the progressive tax rate or the standard tax rate, it is easier for them to make a decision. Because for those taxpayers who choose the standard tax rate, they are not allowed to use the personal allowance. Well, normally for those people who have a really high income, it is preferable for them to choose a standard rate instead of a progressive tax rate. Well, based on my calculation, well, normally your net chargeable income is about 1.2 million Hong Kong dollars during the year of assessment. It's better for you to choose the standard rate instead of progressive rate. So here we just wrap up the brief introduction about how to fill in the salary tax calculator. So for next part, we're gonna chat about the how much we actually have to pay for the salary tax in Hong Kong according to different income level.